perspective. So remember we pretty much finished the what's this? The course last lecture. Yeah, we're just doing a few exercises that we hadn't done. Otherwise, we really are done. We really are done.
The last episode, we still have a couple of last slides.
Yeah, no, we're gonna go into your assignment and your test, and then we'll try and do 1 or 2 papers. Because I know they've also given us some additional sessions as well. So, lucky you guys. So I think let's start with 6.1. This is not the one I'm looking for. We want counting 1B. Okay, we are. That's fine. Just waiting for this to load and then we'll get cracking. So we're in Unit 6. Okay, right. So if you do recall, I did actually say that you guys need to do this for homework. Whether you did it or not, I don't know. That might be a different story. But let's quickly get into it. So 6.1, what's going on there? Okay, so it's much like the example illustrations that we did. You see there, in each of the following scenarios, calculate the change in members' percentage interest and or members' funds. Okay, scenario 1, what's going on there? They've given us the information. Member A, 10%. We've got the contributions and retained earnings, in other words, their funds. Then it says transaction. Member D joins the CC. His contribution in the form of a vehicle is valued at 60,000. 20% interest in the CC is acquired by him. Okay, so he's acquired 20%. What do we need to do over here? What must happen? Okay, there we go. What do we need to do? To the other member, okay? How do we go about doing that? Okay, so firstly, member A has got 10%. So we say 10 and then times 0.20, which then should give us 2%, right? Okay, so that's coming from member A. Okay. Then we have member B who has 40%, so 40% times 20%, okay, which should then give us 4 times what member A gave, which is then obviously 8%, okay? Coming from member B. And then finally from member C who has 50%, times, again, we're giving 20% of that share, and 20% of 50%, this time it's 5 times what we gave over from member A. Let me zoom in here. Okay, so that is going to be 10%. Okay. So the new interest for member A is obviously then going to be, I should have put this down here somewhere. The new interest for member A is obviously then going to be 8%. For member B is going to be 32%. And then obviously member C is going to be 40%. And then obviously member D now has his 20%. Everybody happy? Now that we've done that, what else do we need to do? What else do we need to do? Yeah, talk to me. I think you are right. What you said is this. When somebody joins, yes. On the members' contribution then, and retain, are you sure about that? When a member joins, do we do anything with the contribution, or is it just the retained earnings? Think about it for a second. You can also look at the illustration quickly. Do it enough. Is that a hand? It's just a. I'm so sorry, I can't hear you clearly. I'm gonna come close. Sorry, you're saying? Only the retained earnings. Is that what you wanted to say? 100%, you guys are correct. So when the member joins, you obviously the interest of the partners is altered, and then only the retained earnings. The contributions remain the same. Okay. So here contribution 10,000. Here it's going to be, oh, so I should put that R there just for the consistency's sake. This is 44,000. And then this is still going to be 32,000. And then this is going to be, remember D, they said how much? 60 or is it 20,000? How much did he give? 20. Oh, 60. No problem. All right, so we've dealt with that. That's fine. Cool. Now retained earnings need to be adjusted. Okay, So remember, we're giving 20%, 20%, 20% of each, right? So maybe let me do that over here. We're saying, okay, 28,000. What is 20% of that? Times 0.20. What do we get? Oh, you know what I should do? Okay, it's fine. I'll write this out, then I'll adjust. 28,700. Sorry. Someone saying something there? Okay. I'll type that in just now. At 55740. Thank you so much. And does anybody have for the 40? Okay. I will change that now. It's at 880. Okay, perfect. 6,000 for 400. We have both? Oh, my bad. Sorry. Thank you for that. So this should be 144. Sorry, 114,800. And this should be 143,500. And I'm guessing these amounts are also going to change, right? And 60. Okay, 960. Thank you. And this 700. Is that it? Okay. So this is what I wanted to do. Just going to change this quickly here. And then just put a dash here so people can see that this is not affected. Okay. And that one, I think we can leave it. Okay. All right. Okay. Now we know the retained earnings, how they're affected. So just going to copy this here. And I'm going to put this negative in bracket because this is decreasing member A's retained earnings. Just type 960. And then finally here, 28,700. Okay. All right. So when we take the initial retained earnings of A of 28,700 minus 5,740, what is our new retained earnings for member A? Should be about 22, I think. 960. Double check it. Help me, help us. If it's not right. We're saying member A had 28,700 minus this retained earnings, which is going to transfer over to member D. And then you agree. Okay. Let's see if the answers agree with us. Is there anybody already looking at the answers? Okay, yep. Okay, so we're on track. All right, happiness there. All right, so let's go with the next one. Member B, what's his new retained earnings? We're saying 114,800 minus the 22,960. 91,840. Awesome stuff. Thank you. Okay. And then next one, last one. Well, not last one. Member C. 143,500 minus 28,700. Should be about 800. Okay, awesome stuff. Okay, now if we were to calculate the retained earnings that belong to member D, we pretty much just need to add up all these to get the retained earnings for member D. $400. All right. Okay, and he had nothing before that, so it remains as 57. 400. Okay. All right. So again, the thing to remember when a member joins, we know that okay, the interest for all the partners is going to be adjusted, and then retained earnings is going to be affected for all the partners as well. And then we don't touch member contributions. All right. Awesome stuff. So let's go to the next one. Scenario 2. Member resigns. Okay, so someone is leaving the CC this time. Okay, this one's actually the easiest in my mind. Well, am I telling the truth? No, I'm not. Actually, I think I am. I think I am. That's the last one. Okay, yeah, I am. What must happen, guys? What do we need to do? Which member left here? Member B resigned. Okay, yeah. Mm-hmm. Okay. You're doing very well. Don't worry. Okay. I'm just not doing. Okay, so 10 plus 50. Thank you. Yes, 60%. 60 is the total. Yes. Mm-hmm. 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 Variable times 40. Exactly that. And so 6.67. Cool. And then B, we have to do the same thing, isn't it? So 50 divided by 60 times 40%. Okay, percent. Right. Okay, so we know that member A is getting this 6.67%. Okay. Therefore, his new, yes, it's going to be 16.67%. Okay, member B is resigning, so all of this 40% is disappearing. So that leaves member B with nothing. And then we know here is 33.33%. So he or she is getting 33%. Right. And why aren't we doing anything with the fund? Why aren't we doing anything with the fund? Or are we doing something with the fund? I don't know. Talk to me. With this person resigning, what's happening? Yeah. Yes, his funds back. Okay. But the other partners, nothing changes in relation to their funds. Okay. Thank you for that. Right. Last one. Last one. What's happening with this one? Yep. What must happen? What do we need to do here? You said that text on the group, what? What must happen? Yes. Must deal with the interest first. That's fine. Do you want to say something? Okay. So we just take 20% straight. No, no, no. We're just going to start with the interest first. So we're here. Interest. All right, so I think we're all on the same page that, let's deal with the interest first. Okay? So again, this is an internal transfer, right? So what's our first step? Remember the last time I was with you guys, I told you there's a difference between 20% in the CC and 20% of one of the members' interest. Okay? So in this scenario, it's 20% of member C's interest, right? So what must happen? How do we start to play around with this here? We have to ask ourselves, what is 20% of member C's interest? So, how do you get that? Okay. So we say 50% we know is member C's. So we all are together, right? 20% of member C's, member C's interest is 50%. Then we're saying we want 20% of member C's interest. So we say times 20%, which is the same as 0.20, which then gives us the 10% which both of you mentioned. So now we know what we actually want is 10% of member C's interest to transfer that to member B. Does that make sense? Okay. If they had said 20% of the CC, we weren't even going to bother with this calculation. We would have automatically come here and been like, okay, minus 20% straight. Does that make sense? Okay. Right. So, let me see here something. Okay, cool. No problem. So, yeah. Here, we're going to put this in brackets, 10%. I know you guys, when the test or exam, well, when the exam comes, I know you guys will manage to do this without even thinking about it. But I'm just taking my time with it just to make sure that you don't second guess yourself if you find yourself in either of those scenarios. Okay. Because this question is coming, best believe. They didn't test you in your assignment on it, your test, so this is definitely going to be it. Okay. Unit 6, there's no running away from it. So here, then we're adding this 10%. That obviously is going to give us 50%. Okay, and obviously nothing is happening with member A. So he's still got his, or she's still got her 10%. Okay. Do we end there? Are we done? Is there anything else we need to do? With interest, yes, we're done. Only retained earnings and members' contribution. Okay, so let's get into that. So we know that there is 44,000 in contribute. Oh, sorry, it's from member C to member B, right? Okay, yeah. So we're saying 32,000 contribution that member C has times 0.10%. What do we get? 3,200. Okay, and we might as well just do the retained earnings now as well. So 143,500 times 10%, 2,350. Am I telling the truth here? They just say 20% of the funds. What did they do?
No, well, it says that member B buys 20% of member C's interest in the CC for 28,000.
Yeah. Yeah. I had a feeling, something in my gut was saying, yeah, so you're right. We're supposed to say 20% there. Because remember why we did this calculation is to say percentage-wise, how much are we actually transferring over? So my bad. Sorry, guys. So this is basically double, so that's going to be 4, 6. This is going to be 700. And this is going to be 28. Boom. Okay, so member A, again, nothing changes for this shareholder or member. And then for B, 6,400. And C, we are deducting that. Everybody happy? Okay. So now we ask ourselves, okay, so this is not going to change. This is going to be 10,000. And that's going to be okay. How much do we have here? This should be 50,400. Double check. And this is going to be what? 140 or 100? Yeah, 140 something thousand. if I'm not mistaken. How much? Isn't we saying that 28,700 plus 114,800? Ooh, sorry, say again. Uh-huh. 35. Okay, perfect. Right, and how much do we have for member C? What is there new member contributions and retained earnings? Should be 25,000 something, 600. Am I right? Okay. And then finally, here we're going to have 114, 800. Am I right? Okay. So, happiness there? Any questions, thoughts, concerns? I wouldn't be surprised if they actually just gave this as a question. Like the illustration example. No. Yeah. Quite similar. You saying what? It was brand new. It was brand new. You see it for the first time. And this is why I said do it for homework, so that now when we do it together, it's like a recap. You know, you remember. Okay, when a member joins, I know I need to change the interest. I know I need to change retainer. When a member leaves, I just simply need to change the interest and obviously then pay that member who's resigned their member contributions and their retained earnings. When there's an internal transfer between members, the interest is going to change for both those members. The retained earnings is going to change, and the contribution is going to change for both those members. And then whoever is not involved, everything stays the same. Okay, that's all you need to remember. Okay, then obviously this bit as well. Is it 20% of the CC that's being transferred, or is it 20% of the interest in a member's interest? Once you've got that, easy peasy. Okay, right, then, so we've dealt with that. Let's move on to question, yes?
In case you make the mistake to buy those to the CC and you still get some marks maybe for the method to show how you work stuff out, or if you lose completely if you make that mistake.
There probably are method marks, but I think you'd lose quite a few marks, to be quite honest with you. Because the moment you have, for instance, remember in the example that we had 20% of the interest. If we deducted straight 20%, and you see how you're consistently making that mistake. But you will, yes, probably get marks because you're doing the right method. You are saying 20% of this and then deducting it from this one member and giving it to the next. So you would get marks. But yeah, you would probably lose quite a bit. Answer that? Awesome.
Just to make sure that it's simple.
No, true. Okay. So now what I want us to do, did I set this up? Okay, I did. Perfecto. I'm just going to zoom out a little bit. Okay. I want us to do 6.4. And then we'll get into 6.2, which you guys had for homework. Maybe we'll get into 6.2 after. Well, you know what? Actually, let's not do that because I see we only have 10 minutes to the break. So here's what we're going to do. Just going to discuss 6.4, which is fine because it's not brand new. We're just doing it now from a CC perspective. Okay. All right. So we're just going to talk about this real quick. Okay. So under the required, it says prepare the appropriation account for the year ended 28 February 2008. Ignore that and dividend tax. Okay, ignore that. That makes our life easier. Okay, then it says the following information relates CC information on 1 March 2007, member contributions, okay, then retained earnings, okay, and then we have balances on 28 February 2008. We've got those balances, that's fine. Then additional information. Income tax payable for the accounting period amounts to 52,500. Net profit of 64,500 must be distributed to the and again the question is prepare the appropriation account for the year ended 28 February 2000. We had lots of fun with this and we had the time to really do it but what's important is they ask you to do the appropriation account. Remember what we use the appropriation account. Whether we're in partnerships or against. The function is the same. Remember it's a final account. Okay? What do we use it for? Remember we have the trading account. We use that to calculate whether there's a gross profit or a gross loss, right? Then we have the profit and loss account. We use that to calculate whether there's a profit or a loss. After we've done that, we then need the appropriation account to do what? To pay out the profits to the members, or to distribute the profits to the members, or if there's a loss, to distribute that between the members according to their shareholding in the company. Does that make sense? So that's what the appropriation account. You can think of appropriating the profit. You know, just to remember. So in this, we then say, okay, cool. We need to do the appropriation account. In other words, we need to distribute the profits between the shareholders or the members in this scenario. So then we say, first thing you need to ask yourself is, okay, cool. What would then be your opening balance? Okay, your opening balance would be retained earnings from the previous year. So that information on 1 March 2007, we need that retained earnings of 36,000. Okay. Because remember, these are profits, but they're profits that were held back from being given to the members. Does that make sense? And remember, even though we haven't given it out, that is still money that is due to them. So this year we could decide, actually, let's give them the money. Does it make sense? So you would have that there. Okay, I'd actually put this up top there, but I see in your books, this is as it is in your memo, but I'd actually have this up first. Because the profit before tax is what we've done during this financial year. Does that make sense? So, yeah, you look there, your profit and loss, you can see it there, balances on 28 February 2008, right at the bottom. You have your profit there. Now, this is where people are really testing you. I'm just going to say this in another speech. This is where people are really testing you. Do you know what your appropriation account is for? Because they've given us all these line items, but we don't need them. All we need there is a profit. So if you don't know that the appropriation account is actually just for distributing profit, not to start calculating expenses and using what, yes, there's a lot of assets and liabilities, right? Then you're going to include those, and that's what students do. They just say, okay, it's an expense, or it's an asset, let me debit this amount. Right? That's not what we're doing. Sorry. remember what I said, member contributions is pretty much capital. Capital that we've injected as a member. So here, can you see, remember we're distributing profits. So it wouldn't be needed here, but you would need membership contributions in your balance sheet or your statement of changes in equity. Makes sense? Good question. Excellent question. Okay. Right. So we have those two. And can you see both those amounts we credited? Because remember the appropriation account we treated like an income account. Isn't it? Increases on the credit side, decreases on the debit side. Okay? So, all right, fine. They tell us that we have income tax. Income tax, what is that doing? That's decreasing our profit. Can you see we debited it? Okay? Sure. Fine. We've dealt with that one. Then they tell us net profit of 64,500 must be distributed to members. So again, that's going to decrease our appropriation account because this money is leaving us. Okay? Like I said in the last session that we had together, we're always doing the books of the business. All right? Whenever you see us reporting things in relation to the partners, it's based off of the transactions with the business. We're doing the books of the business, not the partners or the members' books. Okay? So cool. We've reported that. Okay? But now we know that we haven't paid out everything. So then we need to calculate what is this year's retained earnings. And that's what's taking place in the practice. Let's say, okay, fine, this 162, so we just added this side. I would have actually split it up so people can see clearly how it's coming together. But yeah, that's your profit for the year and your retained earnings for last year. Minus your tax that we paid, and then minus the profits that are being distributed. We know the difference is obviously then retained earnings, but we're keeping within the company. Are there any questions in relation to this? Okay. So this, I think, is the only question in the unit that deals with the appropriation account, if I'm not mistaken. But now you know it's not different. We would have done the exact same thing in a partnership. The only thing that maybe they could have added on in this question is if they made you actually distribute the profits between the different members or the different partners. Because here they didn't tell us we have this partner and that's their share. We have this partner and that's his share. Etc. Sorry,
I wanted to ask about what if they did tell you
about the other partners in their share. So you would
earnings plus all the numbers.
So here under like distribution to members, you would put the member's name. In fact, you might not have this. You would have the actual member's name, and then in brackets you could put profit, and then obviously the amount you're giving that partner, and then you just keep on going depending on how many partners or members you have. Then you'll be fine. But we did that in when we did partnerships, so you can just have a quick look there. Okay. Anything else? Cool. Right. So, okay. So, what I want us to do is 6.2. Okay. But for now, see, we only have 2 minutes to your break. I want us to just read the required so that when we come back, we just hop straight into it and answer the questions there. So there you can see at the bottom under the required, it says, prepare a detailed statement of members' net investment showing the balances and movements as well as the representative percentage interests for the members for the year ended 28 February 2005. Hint, rearrange the transactions in date order first. Prepare the actual note for transactions with members as at 28 February 2005 with members as required by the Act. Okay, cool, no problem. Right, there, if you actually did attempt it for homework, I'm sure you realized them not putting the transactions in date order. I don't know why they did that. It's not very good. It just
Amanda won't do it because of time.
I would say, I would think it's a bit harsh. Right. So anyway, when we get back, we'll deal with that, and that will literally be the last thing that we deal with today. Okay.